The first quarter of FY22 is going to be marked by the impact of the second wave of COVID-19 and, of course, the ensuing lockdowns. And that's exactly what we saw reflect in Tata Steel's production and sale numbers that they released for the quarter gone by. That's the June 2022 quarter, which is the first quarter of the fiscal year. Now, the sales declined by the production declined by about 3% QOQ, that's compared to the March quarter, at 4.6 million tons. And obviously, it's the sales that saw the larger impact, which declined 11% QOQ at 4.2 million tons. Now, do remember, at this point of time, it does not really make sense comparing numbers on a year-on-year basis, because even the corresponding quarter had a large impact of, the first wave of the COVID-19 and, the lockdown. In fact, the impact was much worse in the first quarter of last year, and hence it makes sense to compare the production and sale numbers with the previous quarter. That's the March 2021 quarter, which, by the way, was a obviously fully functional quarter. What's more, on account of the fact that, back home in India, we had all of these lockdowns and we had localized lockdowns, higher exports, we obviously saw that factor come in once again, because remember, steel companies have been managing exports at times when domestic sales is lower. So currently for Tata Steel India, domestic sales were around 84%, whereas exports was 16%. So when we adjust for higher exports, which is 16% of sales, domestic sales actually fell by even more, by 16% sequentially. But again, remember that for Tata Steel, mercifully, and for all the steel companies, the saving grace of sorts is going to be the margin trajectory. Now, of course, CLSA has also pointed out the fact that Tata Steel is going to benefit the most from higher steel prices in India, but it's going to be also about the sales mix. So CLSA says that they estimate the domestic sales mix has deteriorated slightly, with autos contributing to 16% of sales. That's slightly lower versus 19% that they contributed in Q4. But strong steel prices, the renegotiation of auto contracts, and also the higher export realizations are going to drive the first quarter EBITDA margins to even higher levels than the decadal highs that Tata Steel registered in the fourth quarter of FY21. So that's going to be a very, very important point, and that's exactly the reason why CLSA has a buy stance on Tata Steel. They say that they will benefit from higher steel prices, from iron ore integration in Europe as well. While volumes fell, spreads were very, very high. So all of these factors bode well for Tata Steel, despite, of course, that blip in sales and production seen in Q1 on account of the lockdown. And hence, a buy from CLSA on Tata Steel, target 1,136 rupees.